We've got to unmute you here.
I'm usually the one in control. I'm
I know.
I'm
Well,
great.
I did make you co-host, so you
Yeah.
should
Oh,
be
did
able to.
you? Okay.
I think you should be good. You should be good. You can share your screen. But hey, we have I think we've tried about 13 times to get you on one of our events, and you're a busy gal. So persistence pays off, you guys. She's here. She's here. We're so grateful to have Mary Jo. Your message is going to tie right into this on the profitability piece, and read your books and just think that you have some sound principles to be able to share with this audience. So we'll jump right in.
Okay. I'm excited. I haven't presented in forever, but you are right. Persistency pays off. I'm like, you guys need to plan like 4 months in advance, and then you can grab me.
Yeah, right. Not 6 weeks, huh?
Yeah, I looked through the that was a good message from Mike. I mean, I just tuned in at the end, but I
Oh
love
yeah.
solutions. That's so exciting.
Yeah.
I like those ideas of those solutions. That's fun. And I did see I know a couple people in here, so that's exciting as well.
Yeah, I think you've got some clients in here,
Yeah, I
mutual
do.
clients in here. So, yep.
Yes. All right, let me share my screen. Let's see. I'm Let me share this first. I don't know what I have on in the background.
Okay. Oh, there we go. Mike already shared that. That'll make it easy. So click on that link and you can get Mike's presentation. That makes my life a lot easier than I don't have to try to. I will go ahead and copy and put that in my notes. We can send that out as resources after the event. So thank you for sharing that, Mike. Hopefully, I don't think there was anything proprietary in there. It was just good information that can be shared. All right, we can see
All
it.
right, I'm ready. Okay,
Oh,
I am going to, I'll be honest, I'm going to skip all your chats right away because what happens is I start reading the chats and then I lose track of where I'm at. And so I will get to your chats. I promise if you have questions, I
yeah,
will get there. Um, okay. Oh,
yeah.
I'm
And
not gonna let.
I'll interject if there's
Yeah.
anything that
Okay.
like it needs to be
All
addressed.
right. Very good. Well, I'm assuming that, and I shouldn't probably assume, but we've done a lot of work on marketing and we've been around for a while. So I'm assuming that everybody's kind of heard of me, maybe have some questions about what exactly is this farming without the bank thing and how big of a scam is it? So we're going to talk about it today. Um, I would just like to introduce, why isn't that working? Okay. First, I'd just like to talk a little bit about myself so you guys have an idea about who I am. I grew up in southwest North Dakota, and my folks were purebred operators. So we had cattle and we had Charolais cattle, and they farmed. And so dad did a little bit of farming, but mostly it was the Charolais operation that we had. And so I like the cows, I like the farming. God did not say, you go take that risk. So I went to town because my brother wanted that risk, so he can have it. So I went to town, worked a job, had my typical jobs, but I was always very, very, very interested in money and how money works and how can I make more money? How can I invest smarter? All of those things. And along came 2008 and the crash happened. And I was really, really mad. And I'm like, this is the biggest scam ever. I did not work this hard to put money into a 401k and an IRA so that I could lose it. And then I started really looking. How do I play penny stocks? I was reading Robert Kiyosaki's stuff. I was listening to Dave Ramsey and Susie Orman. I was doing everything to figure out how I could get out of that system and not lose my money again. Because let's be honest, if we take most people, I'm one of them. If you put me in a casino, I am not going to put a penny in a machine. I will watch people play craps all day. I will watch you. I will people watch, but I am not going to lose money because it is not something that I believe in, that I do. I'm just going to work and I'm going to make money work for me. Now, if my husband gives me his $20, Then I will use that for the casino. And yes, it's one pool of money. I'm sure you guys have heard me say that, but it came out of his pocket, not mine, so it makes me feel better. Um, so in 2010, when I was looking for stuff and answers to what can I do with my money, I came across the infinite banking concept. And that concept is what farming without the bank is. So I want to go through that today and just give you an idea of what that is, what that looks like, how that can change our financial future. Um, in 20, I started in 2010 is when I started teaching the infinite banking concept. And about what, 2012, corn prices were high. So I was at farm shows, and every farmer in the world walked by me, laughed, and said, I'm already farming without the bank. And they had their feathers all puffed up, right? They were amazing. They were doing great. And I had the numbers on a piece of paper, and I was like, this is how it's going to work. Well, they said, Mary Jo, you don't know what you're talking about, nor are you don't even look like a farmer. I'm not sure what looking like a farmer looks like, but they were like, you don't understand farming. And I'm like, yes, I do understand farming. I understand that you're going to the bank to borrow money. I understand that the bank is signing off on your checks. I understand how the money is flowing through your system. What you're not understanding is the concept of how to utilize money. And so I'm 100% German. I'm Henri. And I'm like, well, Henri meets Henri. Then I guess I'm going to write this book and you're going to read it and I'm going to make you read it in order to meet with me. And so we're not going to fight about what infinite banking is. Instead, I'm going to teach you what it is. So in 2013, I wrote Farming Without the Bank so that I could just get through to farmers. Like, I love y'all because you're a little bit blockheaded and a little bit ornery, and so I can handle ya, right? There's a lot of people that just are like, I don't want to change. Now, I'm not going to say there's anyone in this group that doesn't want to change because you wouldn't be here if you didn't want the change. And so that's what's awesome about what you're doing, Jared, is that these people want to change. Now, those of you that know me know, and I've already mentioned I'm 100% German, but I'm loud and I can sound like I'm screaming. That is passion. That's German passion, my friends. That is not me yelling at you. It is me just being super passionate about what I do. So while we go through this, that's just a warning that I may sound like I'm yelling at you, but I'm really not. It's just the passion coming through. All right. So let's get into what we did in 1900, over 100 years ago. This is how we farmed. We are not farming like that today, right? You might have one person in there that's like, yeah, Mary Jo, I do that for fun. But nobody, nobody is farming like nobody is farming like this, but we are still managing our finances like we did 100 years ago. We are still going to the bank. We are still putting our livelihood up as collateral. We are still borrowing against our grain. We are still doing all the same things. So if we are going to advance in technology, why are we not advancing in the way we handle our finances? And this is just a little fun fact. In 1916, the Warehouse Act was passed. That's when farm credit started. Before 1916, if you look at history, the bank said, no, thank you. We don't want anything to do with agriculture. It's too risky. We don't have enough for collateral. So we're not lending to farmers. This act said, oh, this is great. Now we can use their storage and we can use the grain that they have in the bins as collateral. That changed everything, right? Now they're going to finance you till the hilt and we're going to become controlled by the banking system. We need to move that control back over to ourselves so that if we want to use the bank, we can do that. We can make them plan B, but they should not be plan A in our scenarios. So think about it, 109 years ago, that's pretty crazy to think that we had that. Before that, we were operating strictly on cash and nobody was lending us money for anything. Okay. So when we get into the infinite banking concept, there's really two parts. A lot of people think it's just the tool I'm going to talk about later, but there are two parts. The first part is the concept and it's the thought process. So if any of you have read my book or you've read Nelson Nash's book, Becoming Your Own Banker, this is the book that I was introduced to in 2010. Nelson Nash wrote that book. The first half of Nelson's book and the first half of my book is really going over thought process. And so a lot of people want to skip that and go to the numbers. If we cannot get our thought process down correctly, the numbers don't matter, right? It's no different than if we say we're going to do regenerative agriculture, but we're not going to actually pay attention to it. We just want all of that all of the microbiomes to grow because we planted a cover crop, but we're never going to do any soil testing, right? We have to understand why we have to do all the soil tests. We have to understand what we're feeding, what we're putting on as a cover crop, what's growing those microbiomes. And that's as much as I know about regenerative. So you are not going to get any more than that. I only know those things. So here are the biggest issues that I see in agriculture on a day-to-day basis. And the first one is not treating it like a business. And Jared, that's awesome because everybody here should be treating it like a business because it's what you're doing. If you are not keeping your books, how do you know what your basis is? How do you know how you can pay the bank or not pay the bank? We have for so long thought agriculture is a way of life. And it is a business, not any different than the business in town. We are not paying ourselves and putting a value on our time. We think that our time is free, and we think that everybody that works on the farm, their time is free. Well, it's not free because if you would go to town, you would get paid for that time. And so you should be putting that same value on your own time. We're exchanging labor for fuel, equipment use, whatever, right? Dad and son work together and the son is just like, oh yeah, I need dad's tractor, so I'm exchanging it. Why isn't there an actual exchange of money going back and forth? There should be a very clear-cut exchange. And that's great. My brother and my dad do it the exact same way. They just help one another. And that's all fantastic. And that works great in our family. But if I was the nasty off the farm sister who said, no, you got all this stuff for free. Well, guess what? I don't know what was happening with exchange of time. I may not value his time. And so when you can have that on paper, now all of a sudden, what are the siblings going to say when all of that is documented? Everybody was paid for time. It's just going to make it clearer, but it should be happening because you're a business. The second thing that we need to look at is you're giving the bank control and then you're complaining about their stupid questions. Okay. So this is funny because I have people, it's rare that this happens because you all have to read the book before you meet with me. But it happens that people come in and they have no idea what their numbers are. Not a clue. I had one guy, this happened one time. He's like, well, I don't know. This is what the banker gave me. And I'm like, what do you mean? He's like, well, I called the banker before this meeting so he could give me my numbers. The banker is running your operation. And then on the other side of it, you're super mad at them when they say, well, how are you going to make that payment this year? Are you going to be able to sell beans for enough? Are you going to sell cattle for enough? How are you going to pay for that squeeze chute? We cannot go in there without knowing our numbers because we run it like a business and then expect for them to give us credit like we know how to run a business. And I didn't truly understand this. I'll be 100% honest. When I started this, I thought bankers were the most awful people in the world. And as I slowly understood how farmers work and how they don't have numbers ready and they don't know their numbers, I'm like, well, there's two sides to every coin here. The banker is treating you like that because you probably can't answer the question. And so the first time somebody asked me to borrow them money, to lend them money, I was like, well, do you have a job? How much money do you make? How are you going to pay that? Like I started asking all the same stupid questions that the banker asked. And it like clicked in my brain and I thought, whoa, now that's why the banker's asking dumb questions, is because I wanted cash flow. I did not want whatever it is that they wanted me to lend them money for, a house, a car, cattle, whatever. I don't want those things. I want the cash flow and I want to make sure that I can get that cash flow. The banker is doing the exact same thing. He is in a business of money. He's just not in the business of cattle. And so he wants cash flow. He doesn't want your cows. He doesn't want your land. He doesn't want your equipment because now he's going to have to go sell all that stuff. And so they're asking you those questions because you may not be presenting all the numbers that they need like your business owner. The other one that we get is you give up profit to avoid taxes. We're going to go over this deeper in some other slides. So I'm not going to get on a tangent because the German passion will come out when we go over those slides. You're not planning for the bad years during the good years. Okay. So we have right now, cattle prices are great. Everybody's doing fantastic. I drive by my neighbors and I'm like, oh, look, new tractor, some concrete got poured. We're going to be putting up a building soon, right? Like, oh, we got a new baler. And I said to my husband the other day, I'm like, they're spending money before the end of the year so they don't have to pay taxes. While they have all this other crap sitting in the yard. I'm like, do they actually need this stuff? Or are we just spending the money now in a good year so then in a bad year, we're going to cry again that we don't have any money because we spent it all ahead of time. And so are we planning right now? Are we building our own banking system right now so that in a bad year, we have excess cash that we do not have to be culprits to the bank? Okay. Not planning for retirement. I am here to give you permission to retire. Okay. And the kids may actually appreciate that you're going to leave someday. You, as farmers and ranchers, do not have to work until the day you die. If you want to, that's fantastic, but you don't have to. If we utilize our money correctly, we can use it for farming today and we can use it for retirement in the future. And then we can figure out what we want to do with our land because there's a million options of what we want to do with land. Okay. We are not planning for secession. We are being fair and equal. And I don't like fair and equal. I like deserving. And so I'm going to touch on that a little bit because I'm the off the farm kid and I can be a little bit more blunt about it than anybody that's actually on the farm. So I don't deserve anything. Just because I was born there does not mean that I deserve one slice of anything that's happening on my folks' place. My brother is there. He has helped build it. He has implemented new farm techniques and strategies. My dad does not know how to run a combine. He is the designated trucker. Okay? That place would not be in the position it's in today if it was not for my brother. I go home to hunt some pheasants, and we might go home every 2 to 3 years to drive truck. Well, I don't drive truck. When I say we, I mean my husband. I am completely worthless. I could drive a short distance, but I am not the one that is out there helping. What do I deserve? I've been gone since I've been 18 years old. I deserve nothing. So this fact that we think that we should be fair and equal to kids that don't deserve it because they've not been there is destroying our operations. We are splitting land up. We are making those that have helped build it buy it back. That is asinine, in my opinion. We should not have to buy things back that we helped build. These kids that this does not happen outside of farming. If I have a business owner as a client, which I have many of them, If I have a business owner as a client, I do not have the conversation of, is the kid that's taking over the HVAC company going to have to buy out his siblings? It is an understanding that the kid that's taking over the HVAC company is taking over the HVAC company. I don't understand why we think just because my last name was associated with that farm for 18 years that all of a sudden I deserve something. And there are kids that come out and they help. They deserve then. Great. They're deserving. But fair and equal is absolutely ridiculous. If we want to save farms, stop passing it off incorrectly. Little bit German passion there. And again, I can say that without being yelled at, that I'm entitled, that I feel like I deserve something, that I'm getting something, right? If you're the one on the farm, it's harder for you to say that, and I'm happy to be your voice. Happy to do that. The other thing we're not doing is we're not owner financing the next generation. The next generation is going to have to buy land somewhere from someone. And what we're doing is we're sending them to the bank. If we are 80 years old or 70 or 65 and we're done and all of our land is paid for, why are we not owner financing them? We're going to go over that and some numbers too in this whole presentation so that you guys can see that. But we're sending them to the bank instead of keeping that money in-house. Why are we making it so difficult for the younger generation to buy in when it's not really that hard? It's just a matter of a thought process, a change in thought process to how money is used. We believe cash is king. Cash is not king. Cash flow is king. I just, right before I jumped into this, I had a meeting with a client who she works off the farm, and her husband he needed off the farm money to operate. And I said, so his problem is cash flow. You're paying down all this debt and you're doing a good job of getting all this debt paid down. What good did that do you? You didn't have any liquid money for cash flow. So cash flow is king. Can we have cash flow coming in so we can use that money to make more money? Again, everybody's like, oh, cash is king. I don't want to borrow any. Well, I don't really want to borrow any either, but where's the cash flow? Not being an honest banker and never paying yourself back plus interest. So if you are a cash user and you are using, you have operating money that you're using cash for, you're buying equipment with cash, you're buying cattle with cash. Let's just talk about even right now, cattle prices are super high, right? And so now we have this influx of cash. Well, if we go buy more cattle with that cash, are we going to pay ourselves back for that cash plus interest? Most of us won't even pay ourselves back. We are going to exchange the cash for cattle. I'm going to argue when those calves are sold, or if you're doing sell by marketing, when you sell that next group, you better figure in the interest rate because you better make that cash has a price to it. If you were to go to the bank, it's going to be 7 to 8% on an operating note right now. Probably 7% on a cattle note. I've seen some 6.5%. And so if you attach an interest rate to your own money, because remember, cash isn't king. So, and it has a value. So you make sure you're paying yourself back plus the cash. Okay. So let's talk about not buying things to avoid or buying things to avoid taxes. This just really gets my goat, you guys. So I'm just using an example here and I have a calculator that has an income tax chart on it. And I'm just going to go, let me just touch on something real fast that I don't normally touch on, but a lot of people don't understand it. And I don't know if you guys can see my mouse or not, but most people do not understand how our taxes work. And so they'll say, oh, I'm in the 20% tax bracket. Well, not all of your money is taxed at 20%. We have a 10%, a 12%, and then I believe it goes to 20. So if this person's making $150,000, 19,901 is taxed at 10. The next 61,150 is taxed at 12. Then the next 68,949 is going to be taxed at 20. So what happens is when we have deductions, so in this case, I have $75,900 of deductions. That comes from the top down to reduce the tax brackets. So some people just don't understand tax brackets. The accountants never showed them that. So just a FYI for some of you that didn't know, we have brackets and how those brackets work. Okay, let's say that you made $150,000 and your standard deduction is 25.9. That was 2024 standard deduction, I believe. Now the accountant says, "Oh, Jared, you owe 18,799 in taxes. But we can get that lower. You don't have to give the IRS $18,000. We can get that down to 8,500, 84.94. I'm going to round you guys, okay? We can get that down to 8,400. All you have to do, my friend, is spend $50,000. And if you spend $50,000, it'll save you 10 grand in taxes." So Jared says, "Well, you know what? I need one of those quiet squeeze shoots. So I'm going to go out and I'm going to spend $50,000. But I don't have the $50,000 in cash. So I'm going to go to the bank and I'm going to borrow the $50,000. They're going to charge me 5% over the next 7 years, because it's going to take me 7 years to pay off that squeeze shoot." Okay. Guess what Jared paid the bank in interest over 7 years? $10,487. But Mary Jo, I could deduct the taxes. Okay. Well, then let's do that. You deducted the taxes, but you deducted the taxes in a 12% tax bracket. So now you've saved $9,228.56. Really? I'm so passionate about this, I'm going to beat this dead horse for a while. Okay. So now let's say we buy a pickup for $50,000. That squeeze chute did not make us any cash flow, did it? Nope. Now we're going to buy a pickup because we need a pickup. Now, if you actually need stuff, you guys go buy it. But if you're just buying things to avoid taxes, this is what I'm talking about. So we are going to go buy a new pickup. Well, that's at 6% over 60 months. So now we paid, hold on, I gotta move myself. We paid $79.98 in interest to the bank. So but we would have paid the IRS $10,305, right? So, we actually did save $2,300 by buying that pickup. $2,300. You spent $50 to save $2,300. What happens if we make this pickup payment yearly instead of monthly? A lot of farmers make their pickup payments yearly. Look at the interest difference. $9,300 in interest to the bank to make that yearly pickup payment instead of making it monthly. Now you only save $956 for that pickup. Well, what if I want a piece of equipment? What if I need a new piece of equipment? Same scenario, right? Except this piece of equipment is at 7% interest, which is a lot of what we're seeing with today's rates. 7% interest, you paid $14,944 in interest. You could have just paid the $10,000 to the IRS. $46.39 is what you lost to the bank. Do we need these things that we're buying to avoid taxes? Right? Did you buy these things because they are a cash flowing asset? Did we buy cattle that can produce income? Okay. If you want to expand the herd, to avoid taxes and get some depreciation, that might not be a bad move. But if these things are a pickup or a squeeze chute that we maybe didn't need, but we're just trying to find stuff, like my neighbors with new balers and they already had a baler, a new tractor, a new feed, a new hay wagon, right? These are just things I'm seeing. A new building that's not actually big enough to put anything in. So if we're just spending money on those things and they're not cash flowing assets, if we need something, can we do that differently? Now, I'm not here to say I love paying taxes. Believe me, I pay $1 bazillion in taxes in a year. But I'm to the point where I'm like, I don't have anything to buy. I I want it to produce some cash flow, right? The other thing that we're not thinking about is that we're creating payments for the next 5 to 7 years. What happens if cattle prices stay for 5 years? Let's just use 7 years as an example. Okay. 7 years we have high prices in cattle. Every year we add a new payment and a new payment and a new payment and a new payment to avoid tax. We have 7 more payments at the end of those 7 years. Now cattle prices tank. How are we going to make that payment? How are we going to make all those payments? One of those payments is going to fall off. One's going to have 6 years, 5 years, right? 4, 3, 2, 1. We're going to have payments left. This is exactly what happened when everybody walked by me in 2012 and laughed at me and said, I'm already farming without the bank. Corn is $7 a bushel. The year after corn dropped, you would not believe how many people came to me and said, well, Mary Jo, now I can't make my payments. Yes, I know. I'm sure you can't make your payments. And then that cycle repeated for at least another 7 years of where they're like, I can't make payments. I can't make payments. Cattle prices were high, and you can correct me if I'm wrong, Jared, but cattle prices were high last time in what, 15? It was about 2015. All of my ranchers at that point went and spent their cash. 7 years of Mary Jo, I can't make my premium payment. I can't pay. I don't have any money. I don't have any money. What did you do in the good times? You didn't save it for the bad times, right? None of us are new here. We all know markets go up and down. It's the cycle of commodities. We're also deciding if we like the banker more than we like the IRS. And remember what I said before? You hate when the banker questions you on how you're going to make that payment. The banker and the accountant are only looking out 12 months. Can you make your next payment, and how do I avoid you from paying taxes? They are looking out 12 months. It is your responsibility to look out 7 years, 5 years, 20 years, whatever that payment is, you wrote the check. It is your responsibility to make sure that your numbers are going to work if prices go down, and you can still make that bank payment. What if you just would have paid the $18,000 in taxes? You would have had $32,000 you could have used, right? If you would have paid cash, if you paid somebody out here saying, oh, Mary Jo, I'd have just spent $50,000 in cash, no big deal. You gave up access to $32,000 that you could have used the next year for operating expenses. So what we're doing is saying, hey, I'm going to buy that squeeze chute with cash, but now I have to go borrow $32,000 for my line of credit at 8% because I used the cash. The people that I see that have money, which is the majority of my clients, if they have a lot of money and they don't have an operating note, it is because they do not buy things to avoid taxes. And I ask every single one of them, do you buy things to avoid taxes? And they will say no. I have a client that he had a dairy. When I met him, he got out of the dairy a year after I met him because the kids didn't want to have a dairy. But he was just a small dairy. I mean, he's got a lot of kids. So he had the kids working for him. But he wasn't some big corporate dairy. And when I went over his numbers, he was making $1 million net as a dairy. And I'm like, that's insane. Everybody is complaining about milk prices right now. How did you do that? He said, because my dad read Robert Kiyosaki's book years ago. And we don't buy anything that doesn't produce cash flow, and we don't buy anything that we don't need. They were not avoiding taxes, and when they did make a purchase, it needed to make them money. And they are sitting in a position right now where now everything he's doing with his money is basically investing. If we don't have the cash to buy if we don't have the 18,000 to pay the taxes, we're like, yeah, but we don't have the $18,000. That's why we went and bought something, because we could borrow against that pickup and that squeeze chute and those things to pay the taxes. You, what do you mean you don't have the $18,000 to pay the taxes? Y'all are working with Jared, right? What are you not putting your money aside for taxes? Like, it sounds stupid to do that. But if we can get in a position where we're like, hey, we're going to put 20%, we're going to sell calves, 20% goes for taxes. We're going to sell hay, 20% goes for taxes. It is painful as heck. But we do not want to be in a position where we have to borrow $50,000 so we can use the bank's money to pay the tax bill over 7 years. Because all we did was redirect that money from the IRS to the banker. It is such a broken thought process. Okay. I'm done with that horse. So I'm gonna move on and beat another one. What if we owner financed? So I want to go over these numbers a little bit, because I think that people do not understand the power of owner financing something. So let's just say we're buying $2 million worth of ground. Both of them at 5%. But one we're going to finance 20 years and one we're going to finance 30 years. Okay. This is actually a real strategy that I helped a client with. She had a neighbor that's selling some ground, and he said, I'll owner finance you over 20 years. And I said, well, why 20 years? Why not go 30? And she said, really? You think so? And I said, well, why not? It reduces your payment by $30,000 a year. So it gives you liquidity. If you want to pay him early, just put in the contract that you can pay him off early. But in the meantime, it gives you some flexibility if cattle prices drop, because they're ranchers. And she's like, oh, okay. So she went and talked to him and said, well, would you consider doing a 30-year finance instead of a 20? And he was smart, and he looked at the bottom line and said, gee, I could make $1.2 million off this deal, or I could make $1.9 million off this deal. If we have land, if we have a neighbor that is going to sell ground, if we can talk to them and say, hey, and go to them with an amortization schedule that shows exactly how much they're going to have at the end of the day. This person could have called an auctioneer and said, hey, will you sell my $2 million worth of ground? And he would have got $2 million minus any capital gains, any auctioneer fees. But now he's saying, you know what? Somebody's got to play banker. Somebody is going to get this $1.9 million of interest. So it may as well be me. Why are we not doing that? What we're doing instead is saying we're going to sell our land to the biggest farmer, the biggest investor, China, whoever. They're the highest paying people around. So that's where we're going to sell our land. So we could maybe get $4 million, and then we pay capital gains, and then we pay the auctioneer fees, right? We can still make the $4 million if we owner finance it ourselves, or if our neighbor owner finances us. I would much rather give my neighbor $1.9 million of interest than give that to a bank. And my neighbor may actually be easier to deal with. This is not a fit for everybody. Let me just be clear, because y'all are probably in the comments. This is stupid, Mary Jo. This is not a fit for everyone, right? We might have crazy neighbors we don't want to deal with. We might have family members that have lost their marbles that we don't want to deal with. We may just emotionally want to get the family out of it because we're buying out a sibling. But when siblings get greedy, why are we not saying, hey, why don't I just owner finance you? Right? You want more money, charge it to me through interest. Again, if the situation fits, do it. If you can. I have a client that they bought a building and the bank was just being absolutely unreasonable. And so they went to the husband went to the seller and said, "Hey, will you consider owner financing?" He said no. And she called me and she's like, "Well, he asked." She goes, "But he just kind of said no and then they moved on." And she just doesn't take no for an answer. So she printed out all the amortization schedules. They met with him again and said, "Hey, the bank is being difficult, but would you consider owner financing us? This is how much your monthly payment would be, and this is how much you're going to make in interest." The building was for I think it was like $150,000 or $180,000 loan. Okay. He wanted to sell the building so he could apply that to his new loan for his airplane hangar because it was going to reduce his monthly payment on his airplane hangar. And I said, well, depending on how long that loan is for his hangar, that's going to be very minimal amount of a monthly change in his payment. I said, but if you pay him monthly, he can take that amount monthly, which is going to be much greater, and apply it to his loan. I'm like, it doesn't need to come off his purchase price. He can use it towards the next loan payment. And they explained that to him and they showed him all the numbers and he owner financed them immediately. But they had to bring the papers. They had to explain it to him because even though he's a business owner, he had not thought that way. And what I'm seeing a lot is that people are they're selling land and then they want to move to town and pay cash for that house. Because I'm 75, 80 years old, I want that house paid for. What they don't understand is if you're paying me $130,000 or $160,000 a year, that money can go towards my house payment. Who cares if I have to finance the house, right? And then if they die, then you just keep paying the estate or however you work that out. I am not an attorney. Go see an attorney to figure out how to do this. But there's a million ways to skin this cat. We just have to stop sending everybody to the bank and saying, "Hey, you go here and I'm going to sell it at auction and I'm going to sell it to the highest bidder." We bought some farm ground on auction. Am I going to sell it on auction? Not a chance in hell. I will sell it to somebody and it's not going to be the neighbor whose daddy owns the bank. Okay. I will owner finance some young guy in the neighborhood and give him an opportunity because the banker's son is buying everything. Right? If we can do that for some young people, why not do that? Okay.
Amen.
Thanks, Celine. Who's giving me claps? Selena, thank you.
Yep. Yep. We love you. We love
Little
your
encouragement along the way. I like it.
So we're at 15 minutes, Mary Jo. This is awesome.
I've talked for 45 minutes already.
You just roll
Oh
through.
my God, I have a lot to say. Okay. So so we can do the same thing with if we're going to if we are going to owner finance for acreage, sell it at a higher interest rate and reduce your per acre price. Okay. I got to go fast, you guys. I had a lot to say. Don't pay off. And I can send you these slides, Jared, so people can look at these.
Yeah. That'll be great. We'll just have to get you back another time.
Yeah. Yeah, we could reschedule.
We'll go part two.
If you have a 15-year mortgage, don't do a 15-year mortgage on something when you could do a 30. Do a 30, keep the extra money, keep the difference for liquidity so you can use it over the next 15 years. If you want, you can use it then to pay something off. Okay. All right, let's get into the tool. So that's the thought process. Now, where do we put this money so that we have liquidity, we have control, we have uninterrupted compound interest? We can pass dollars off that are discounted. We can create generational wealth. The piece that people are not looking at is we want liquidity, we want control, we want guarantees. We want our money somewhere where we can access it. And crazy enough, the tool happens to be dividend paying whole life insurance, okay, with a mutual company. Dividends are money back from a company. When the company makes money, they share the profits with us. This is not traditional, old-fashioned whole life where it takes you 20 years to access money. This is not universal, variable, or indexed UL. Absolutely under no circumstances is this anything but whole life with a mutual company. If you, I can't, I don't have time to get on that tangent. Okay. The cash value, when I'm structuring these policies, you have 50 to 70% of your money is available in 10 days to borrow against. So we are not putting it all to base where you wait 20 years. We're paying premium and we're immediately borrowing against 50 to 70% of that in 10 days. And we're using it to buy cows, buy feed, buy seed, buy fertilizer, whatever it is that we're buying. Okay. And by year 7 or 11, 7 to 11, that's your break even point. So let's just say you do $10,000 a year. By year 7, you have access to $70,000. By year 10, you might have access to 75 or to $105,000. Okay. Every year it's going to go up. Now, these numbers are all in my Farming Without the Bank book. Okay. So if you get this book, all of this is in there, exactly the same. So this is $100,000 example of a life insurance policy. And I am using it for operating. And I am saying that operating is $75,000 a year. Okay. No, that's not where I'm at. Trying to hurry. Okay, so, and it doesn't matter. You guys, $100,000 is a lot of money. Keep in mind, I wrote this when corn was $7 a bushel. Okay, so subtract to zero, make it $10,000, move your comma over. If you put in $10,000, you're going to have access to $7,400 in 10 days. Okay, if you put in 100,000, you have access to 74,000 right away. This is on a 45-year-old. Death benefit is $2.6 million. Year 2, you paid $100,000. Your cash value went up by $77,000. Now you have access to 151. Year 3, $100,000. Cash value went up by 99. Year 4, you paid $100,000 in premium. Cash value went up by 104. Compound interest and dividends. Year 8, you've paid $800,000 in premium and your cash value is $818. That is that break-even point I'm talking about. Now we have everything. Look at what's happening to our increase in cash value. Every year after year 4, it's going up by more than the $100,000. Compound interest and dividends. It's nothing new. This has been around forever. So let's say, how are we going to implement it? Well, we're going to pay $100,000 in premium. If our operating is 405, let me see. I think I did 425 for 500 for operating. I did right there. So 500,000 for operating. We're going to borrow 74 from the policy and we're going to go to the bank and get 425. When we sell commodities, what are we going to do? We're going to pay the bank back their 425 and then we're going to pay ourselves back our 74. And then the next year, we're going to borrow 151 from us and we're going to borrow 358 from the bank. We're going to always pay the bank first and then we're going to pay ourselves back second. If all went perfect in the world, we have access to 25 or we by year 6 we have an excess of $25,000. So we're out of the banking system for operating. Okay? Is that going to happen just like that? No, not at all. Because life happens. But it's going to give us control. Even if it doesn't happen just like that, it's still going to give us control that we have the ability to, pivot and say, hey, we're going to just pay the bank, but we're not going to pay ourselves. Because the insurance company does not care if we don't pay ourselves back. Our death benefit is collateral to that loan. So if I have a loan of $464,000, my heirs are going to get 3.2 million instead of 3.6 million. They'll be okay, right? Okay, why do we have something that's uninterrupted compound interest? It is because if we put money in savings, it goes down. This red is savings. We put money there and then it depletes. And then we add some more and then it depletes. And it's constantly being interrupted. I compare this to my weight loss program. Okay. I might do really, really good during the week and I've lost some weight and then I blow it on the weekends and I'm right back to where I started. That's what's happening in savings. In the policy, the money never leaves because we borrow against it. We don't take it out. So we have uninterrupted compound interest. And we've built money for retirement. So this same guy that paid $100,000 every year, he now has money at retirement. And in this strategy, we're borrowing $75,000 a year and we are never paying it back and we are never paying interest on it. He can get down to 79 years old and he still has $2.3 million of cash value. At 85, he has 2.1 million of cash value and his heirs have 3.4 million of death benefit. This is huge. This is a big deal. Why? If we can use the money today to farm and borrow against it for retirement, do we have to sell the farm? We can rent it out. We have options now of what we can do. Okay, I can't see my clock, Jared. So when I have 5 minutes, just let me know.
Yeah, you're at about 7 minutes, Mary Jo.
Good thing I could talk fast. Okay. We also have the generational wealth piece that I think is massive and a lot of people are missing. So let's just say that, and a lot of people misunderstand life insurance for this purpose. If I am 60 years old and I have a policy, let's say my dad buys a policy. He's 60 years old, $20,000 a year. Okay. He is going to have a death benefit of $671. So he pays this premium every year. He dies. He leaves me $671,000. Income tax free. Excuse me. We do not pay income tax on death benefit. So he leaves me $671,000. Well, what am I going to do with that 671? I am going to put it in another policy on myself. If I'm 56 years old, when dad dies at 80, now I just created $2.3 million of death benefit. $671,000 created $2.3 million of death benefit. By year, I use all that money to pay premium for 8 years. At the end of 8 years, that 671 turned into 720 of cash value. Got all my money back, right? I was able to use it all. Now I keep paying premium and I leave my daughter $2.7 million of income tax-free death benefit. We have paid 16 cents for every dollar a death benefit. I gave the insurance company 16 cents. They gave my daughter $1 income tax free. What does my daughter do? She's smart. She goes and buys life insurance policy on herself. She takes 2.7 million and turns it into 8.6 million a death benefit on her. She uses that 2.7 million for 8 years to pay the premium. Then her premium goes to $85,000. I know some of you are saying, well, Mary Jo, how is she supposed to afford that? I just left her $2.7 million. If that child cannot figure out how to cash flow to make $85,000, we have bigger problems. Okay. So she's going to pay $85,000 in premium. She's going to leave $11.6 million to my grandkid. We are at 16 cents for every dollar. $11.6 million income tax free. What is my grandkid going to do? He's going to, he, she, whatever, going to buy life insurance. And their death benefit by the time they die is going to be $46.6 million income tax free. All with an 18-cent dollar. We are not doing this in the farming world. Instead, we are making it really, really difficult for the next generation. Why are we not passing off discounted dollars so that next generation can buy more land, use it for operating, buy out siblings, whatever that looks like? If I'm standing on a street corner and saying, Jared, could you give me 20 cents and I'll give you $1? You're going to walk around looking for dimes, right? You're going to pick up every dime and penny and nickel you can so that you can come back to me and get dollars. It's essentially what we're doing. I mean, if you all see Jared on the street corners, you should probably be concerned. But and then what do we do with inheritance? Same thing. We get a lump of money. Can we slowly move it into a policy so that we're creating some death benefit for the next generation? I just ran this strategy yesterday for a guy. Mom and dad are going to sell $1 million house, but it won't be equal in their situation. It needs to be equal. It won't be equal from the son and the daughter. So if we took the $1 million and put it into a policy at mom, on mom, when she's 85, we create $2.1 million of death benefit to make it equal. Okay. So we're going to use this strategy for a lot of different things. Okay. I'm going to skip that. Just don't go by universal life. Bad, bad, bad. And this is an interesting little stat that people think, oh, this is such a scam. Guess what the banks own? Bank-owned life insurance, cash value life insurance. As of 2022, last time I checked the FDIC website, they had $151.4 billion of cash value. That is not the death benefit. That is cash value on their executives. The death benefit is in the trillions. Okay. How are the banks lending money? How do they keep opening new branches? What happens when an executive dies? Income tax-free money. You can insure parents, landowners, kids, employees, business partners. I have policies on business partners. I will have policies on my staff. I have policies on my husband. I'll own a policy on my brother, hopefully, because I bought land for him to farm, right? I have insurable interest in those people. So if you are uninsurable, it's okay. We can just find other people that you can insure. Okay. It's not about saving what you work so hard to build. Or it's about saving what you worked really, really hard to build. There's a lot of us out there that don't want to do estate planning and we don't want to save anything. Instead, we're like, they should work for it too. Then why are you working your butt off every day to save it? To not save it, right? It doesn't compute. Okay. That's it. Did I finish on time? We have
You are
questions.
right on time. Yeah, so tell people what to do. Like for some of
Okay.
them, yeah, this is a brand new concept. What are the steps if they say like, hey, I want
So you have to go get the book. Is anybody in Canada? Do we have any
um,
Canadians on here?
I am sure we do. We generally have
Okay.
I
Okay.
I
So
know
if
that
you're in the US, go to farmingwithoutthebank.com, grab this book. If you are in Canada, go to ranchyourway.com and grab the Canadian version because it's a little bit how you use this in Canada is just a hair different. Lacey and Winnie in Canada can help you. But go to farmingwithoutthebank.com, grab this one. And if you're really, really wanting to make sure you know everything, you get both of them. Get the bundle and then you will get an email with the link to my calendar. You cannot talk to me unless you have read these books. Okay. If you come in and you're like, yeah, I haven't read the book, I will end that meeting because you need to understand this concept because I'm not here to fight with people. I'm here to teach them how to utilize the concept. So, and then of course you can follow me on all the places. And I have a podcast. I have two podcasts, Farming Without the Bank and Without the Bank. And so you can share the Without the Bank one. I also have Life Without the Bank. I wrote that book for non-farmers. So if you have 401k money, if you're spending cash on kids' college, you should probably grab that one too. So that's where you find me.
okay, very cool. I'll just put the link in the chat. So jump on there, buy the book, book time with Mary Jo, and yeah, definitely check out her podcast. She's got a lot of good information and principles on there all the time as well.